Good day, everyone. Well, as we know, the Fed did the expected and kept rates pat. Of course, they got a jawbone and talk about their meeting in December and how there is still a chance they might raise rates at the conclusion of that meeting. They had said earlier this year that rate hikes were imminent by the end of the year, so they kind of have to stick to that script. They don't want to get too much off it. You know, that's the mark of a politician, anyway, that tries to stay to the script. The Fed futures went from, I think, 35 to 43% odds of a rate hike in December. So it's still a pretty small number, and I think that number will probably diminish as we get closer to the meeting date in December. You know, the fact of the matter is that the central banks, they're all hamstrung, and they all kind of move in unison, as I wrote in the report, because, you know, you've got imports and exports and corporate earnings tied together, never more so than now. Therefore, with the ECB and Bank of Japan and Bank of England having easy money policies, I think that means the Fed is really going to have no choice but to keep rates at the same level. I did write in a prior report some weeks ago that in the 1930s, the Fed did a ceremonial 25 basis point hike, probably for political reasons is my guess. Actually, I need to go research that to see what their justification was for the 25 basis point. But then, as I wrote, the rates basically stayed at all-time low levels for, I think, the next several years. And who knows? I mean, we're in similar. Well, we have a serious debt crisis in the debt bubble now with all this money printing that's been going on. So while we're not in the 1930s, it's a different time, there are some resemblances. And I think that that the rates may stay at these low levels overall well out to 2017. We've got to see some sort of pickup in this anemic economic situation, and right now we're just not seeing it. We're not seeing the evidence, the hardcore evidence that normal recoveries contain. So in the meantime, we will continue to pluck points off stocks as they present themselves. We had a number of pocket pivots that occurred and Bible gap ups that occurred. Gil, I actually am not seeing the forward charts. I'm just seeing the intro screen. If Gil is there.
Yeah, let me get that straightened out here. Let's see.
Actually, you can just go ahead and put up. I just wanted to talk about one stock, and that stock is IPHI.
Can you see them now?
No, they're still not. Strange. You always. Now there they go.
Okay, a little bit of a delay there, I guess.
But now they're up. Yeah, the first time I think the button just wasn't hit, because normally they do come up. But I wanted to talk about IPHI. I'm putting that up right now. And that's one we put on our list. We sent the report out on this one on the 15th when it had a pocket pivot. And then we put it on again when it had its Bible gap up just yesterday.
Let me fix that chart there, Dr. K. It's missing
IPHI.
It's missing the volume. Hold on. Oh, I see what the problem is. Hold on. There we go.
Okay, perfect. So yeah, on the 15th, this stock had a pocket pivot, and then it had a Bible gap up yesterday on strong earnings report. And so, you know, this is one that, with the Bible gap up, as I've said, it's not getting ahead of itself. It had a really nice day yesterday, and there's no need to sell it because it did have a gap up higher. So from here, should the market remain in some sort of uptrend, this will probably uptrend with it and probably outperform it. That's why we chose it, because we like the leading stocks that are going to outperform markets. It got a little bit hairy in here when it retraced. I mean, it didn't really get ahead of itself in this pattern. I mean, you could argue both ways. I'd say that in this kind of market environment, when it hit 30 here relative to the chart, it's a bit over ahead of itself, and there's nothing wrong with taking some partial profits there. And then it retraces, and now it's back up again. So if you had sold some into this downward swing here, you could have bought back, and now sitting on a position to see where it goes. But the fundamentals, things look good on the stock, so we're optimistic. As far as market direction, that's anyone's guess, but of course everyone wants to know where the market's heading. We don't know because that's the future, but the market has had some sharp gains, if you see here with the NASDAQ and the S&P, over a short period of time. So it's natural for the market to want to digest those gains, and there's nothing wrong with that. You'll notice yesterday after the Fed announcement, the market sold off pretty aggressively, and then rallied just as aggressively to finish at the high, because I don't think the market really believes that the Fed's going to hike in December. I think that they think that really that things aren't right, and therefore money printing has to continue in some form. The Fed is going to keep rates low at all-time lows through various tricks in their bag. So that's I guess bodes well for the market, as QE has boded well for this aging bull market since 2009. Meanwhile, we see things like oil on an overall downtrend. Yes, it had a nice 6% move yesterday, but if you look at the overall weekly here, the weekly chart is still in a downtrend. Commodity Research Bureau Index is the same thing. It's basically tracing a very similar pattern. There was a very high level of correlation between the two that has been present for a number of months. So yeah, I would just take yesterday's oil and commodities action as a blip. We need to see some harder evidence that the economy is truly turning the corner, and not just one report, but a slew of reports over a period of time that definitively shows things are getting better. And I mean, when that does happen, we might be in 2017, and at that point, I think central banks would probably start tightening up. But right now, we're going to continue this money printing party out to the horizon. And with that, I'm going to turn it over to Gil.
I think when it comes down to individual stocks, it's mostly a big cap market. I mean, the indexes continue to move higher, and you can't really fault the action. The action looks pretty decent to me. So I think the key is being in the right stocks, and for the most part, those have been big cap stocks, even unlikely big cap stocks. Biggest position right now is Amazon, which is pushing out to new highs. Now, a couple of things to think about is that with Amazon, and why I think it might work is that if you look back, okay, we had a gap up after earnings here back in April, went nowhere, finally came out, a little breakout. That actually was a nice move. Took a while. And then you have another viable gap up, but it fails almost immediately. And then we get another viable gap up here. Now, what I'm thinking about is that at this point, this might be a little bit too obvious that it's going to fail. In other words, you know, for the prior two halves, so if you're using the rule of 3 on this, you can maybe surmise that this one will work. And in fact, if you want to judge that by its ability to move beyond the intraday high of the gap up day, you see it never got above here and never got above here, and it did just get above today. So that stock's working and moving higher. You know, whether it continues to work, I don't know, but if you pick it off as close to the lows of the viable gap up day and see where it goes from here, I would be surprised if the market keeps going higher if it got to 700 or so, or maybe even further. I don't know. Maybe this is when Amazon finally does something. And there aren't many believers. Everybody keeps talking about them being unable to make money, but they did finally, even if it is only 17 cents. And they're selling at I don't know how many times earnings. But one thing to keep in mind is that they are estimated in 2019 to make somewhere north of 16 bucks a share. So viewed from that perspective, they're really selling somewhere around 55 to 60 times those estimates. So not really terribly overvalued. So, you know, if you want to try and keep an open mind, everybody always seeks confirming evidence, as we talked about before, confirmation bias. So they want to think something, and then they will only look at the evidence in terms of what they want to think. Sometimes it's not so black and white, sometimes it's gray, and sometimes it's opposite to what you might be thinking at the time because you're really failing to see information that's right in front of your face. So this could work. I tend to like this. I'm probably one of their biggest customers. The one-click button for me is trouble, anyways, but convenient. And like the other day, I was just on there and I decided I wanted to look at anaglyphs, which are 3D pictures using red and blue, or cyan and blue, whatever. What is red? It's just red, or I guess red and blue. Cyan would be what? Help me out, Dr. K.
Cyan,
Would be
dark blue, purple thing.
Yeah. Okay. Anyways, so I ordered a pair of those, and they came like in 2 days, and I was able to look at these really cool Apollo mission anaglyphs that are up on the internet now. And having watched that when I was, I don't know, 9 years old, that's really cool. But anyways, my whole point is instant gratification for something that brought me a lot of joy, being able to look at it for only $8. Anyways, where are we? So we got Apple is working too. I'm long Apple. I think I was shorting it in here. You're getting some juice. I even shorted it after hours on the jack up to like 118, 119, and I got away with it. It came in actually below 114 before after hours trading was done, and I decided I'm not going to look a gift horse in the mouth, so I covered the thing, and it gapped up the next day, so that was lucky. And then I tried shorting it again yesterday, and you could just feel that there was a bid underneath the stock. And one of the things I always watch for when I'm shorting is, and you'll see this happen, maybe some of you have even felt it if you think about it, or had it happen to you when you're shorting a stock, you do get an immediate reaction to the downside. So immediately you're thinking, okay, this is working. And as it's coming down, then you'll notice it just kind of stops going down, and it sits there. And if you're watching the trades go by, you'll see the activity pick up, and it starts coming back to the upside. And it's spinning a little bit. Things don't necessarily tick up like they used to in the old days. A quarter, 5 teenies, and so on going up. Now it's they can spin up 10 cents back and forth, but you can get the general gist of the fact that a bid is coming in. And so I'll just flip out of the short and go long. And I did it yesterday, and so the stock went up, closed above 119. You're holding in, down less than 0.5%. What are we at? 118.80. And that looks like it's going to go higher. And if you consider yesterday that, what is that, Dr. K, a Bible gap? You actually had a pocket pivot gap up here, but it's a breakout from a low range here, a low base range here. So if you look at this as a low base range from here to here, then this is a breakout on a pocket pivot 4 days ago. But that was before earnings, and not really interested in playing earnings roulette on anything, really, even though you may get lucky from time to time. You can also get blasted. Just ask anybody who holds a Biomed today, which is getting plastered. So there is still the danger of earnings, as always. It seems like it's something we have to live with. But in any case, yesterday you had a Bible gap up move. That's also a pocket pivot because it did close at the 10-day line the day before. So you were coming off the 10-day line. So it's a combo. So how can you resist that? You got to buy it. And I have to tell you, if you had told me 2 or 3 weeks ago I would be going long Apple, I would have told you were nuts. But that's the way the market works. Like if you had told me I was going to go from up 30-something% to up 1,000% in the last 2 months, count them, 2 months of 1999, I would have told you were nuts too. So the stock market is all about possibilities, and you always have to be thinking about what's going to fool you. So I keep thinking that everybody on the planet owns Apple. Everybody believes it's a stock you buy and hold forever, but we know for sure that's not really going to be the case, because it will end at some point. But you keep wondering, or at least I keep wondering, where the extra money comes in. But if you're in a big cap market, money will flow out of the smaller, thinner names and into these bigger, more established companies if it's nervous and there's an uptrend that money managers, professional money managers, institutions have to ride. So they're going to come into these stocks. So you can fight the tide, or you can just go with it. If I can sense which way the tide is moving, I just go with it. I don't have an axe to grind, even though out on the internet you'll see a lot of people with axes to grind. And I've learned over time that trying to grind an axe usually means you're the one who ends up getting ground up. So anyways, I see we have a lively crowd this morning, absolutely no questions, but let's just go through some more. Priceline broke out the other day. and it's holding up. And remember, I thought this was an improper double bottom and it might fail, but it didn't. And it might fail at the 1400 level, but it didn't. It broke out, above average volume breakout. I think earnings are coming out when, Dr. K? Let's take a look.
You know, I'm honest, I prefer not to use Wanda because they're usually wrong. Although a big
Well,
company
yeah,
like this,
this is usually right.
you know, and it says
Because
the
these
4th of
guys
November.
are smart enough to figure out that you can just go to either briefing.com or the company's website to get. I'm not sure what O'Neill's doing. They must, you know, that's what happens when you pay people $22,000 a year to basically be research grunts. Anyways, they can't figure out the obvious. 11/9, so week after next, I think. Is that right? Yeah, probably like 2 Tuesdays.
That's because Wanda says November 4th, so even for a big cap company like this, they're getting it
They're
wrong.
wrong. Yeah, and it's like everybody should know what price is. So let me check briefing real quick. Okay, so let's confirm this. Briefing says November 9th as well. Okay, so you know, I don't know what they're doing over there, but that's pretty sad. Anyways, whatever. I'm not gonna get hung up on it. Let's see what else. We're looking at Priceline Google. Here's another one, and you know, Google failed on the last Bible gap up it had. Let's see, did it have another one? No. Well, was that a Bible gap up on earnings? Yeah, and that failed. And then there's another one here, and that failed, and failed pretty miserably. And it's been looking, you know, if you look at it here, it looks a little tighter, so it's hanging in there. Get the Bible gap up, and it's probably viable the next day, close to the intraday low. So you can get a sense that some of these are working, and they're not working hugely, but they're working. And I think that's probably your best shot at making money in this market. It's very difficult to go after small caps. Here's Facebook. You know, it went through the 100 level. We talked about that, I think, last week. I was testing it on the short side on this day, thinking it would fail at the 100 level. But guess what? Again, I could get this sense there's a bid underneath this thing, and it isn't going away. Kind of like a bad rash, you know, if you're short the stock and it is not going away, and you can feel that if you're open to it, you know, as long as you don't have an axe to grind and some overriding opinion that you're going to impose on the market. You have to be the uncarved block, right, Dr. K?
That would be right.
Anyways, stock blasts through the 100 level on volume, and it's continuing higher. Earnings come out on Tuesday, I believe. Earnings roulette, but my guess is probably goes higher. So let's see, Microsoft. Now, if this isn't a snoozer, nothing is, okay? If we look at the weekly chart, it's coming out of a long base, so about a year long, okay? So it's had plenty of time to go back and forth. I noticed they opened up stores, Microsoft stores that are similar to Apple stores, so I don't know, maybe Microsoft is getting a clue. You know, I've heard from some people that they're expecting big things, at least those who analyze such things in detail from Microsoft. And I have to admit, the machine I'm using right now is using Windows 10, I guess, or Windows 8.1, one of the newer Windows versions. But as opposed to the old, I'm sorry, go ahead, Dr. K.
You'd be using 10 if you're using the latest one.
Okay. Okay, I lose track of them. But I can tell you this much. In the old days, you know, and everybody who's had a Windows, which is pretty much everybody, and the Mac people always used to sneer at us because their computers, as my kids were fond of showing me all the time, the Apple computers can boot up right away and there's really no delay, whereas the Windows machines took forever, you know, and it drive you nuts because it take you 5 minutes to start up your machine, especially if it was over a year old, because by that time it has so much crap on it that it's just like slogging through the mud. But these days, with the new one, it comes up instantly. And with SSD drives, these things are just blisteringly fast. And so that, you know, they are improving the whole operating system. So maybe there is something to it. I don't know. They still don't have a iPod or an iPad or an iPhone, and even though they tried, but you know, who knows? I don't know. But in a market like this is where money flows. And so what you're seeing today, I believe we're getting a volume dry up today. Let me check this.
Can you hear me okay?
I hear you fine, Dr. K.
Yeah, I was just going to say that with Microsoft and a lot of these types of companies, they're mature companies, and unless they have a huge revamping of their business model, you can expect that they're going to stay at a similar speed of price increase. In other words, a company like Microsoft, it can gap up all at once, but its rate of ascent is going to probably be equivalent to what what it was before. Even if it's doing everything right, then it's going to maybe be like it was in 2014, where it had a fairly good rate of ascent relative to its past. But yeah, this is a snoozer, like you said, and a lot of these these big cap stocks, unless they're like the one-off, like an Apple, and I question whether Apple can ascend as fast as it has in the past, but it has been reborn a number of times, and it has done very well for investors. But that's a one-off. That is a one-of-a-kind company, and you have to have the monopoly on your product, which it very much did. Microsoft, I don't see having a monopoly in any sense, even though they're a respectable company, but we're here to make money, and I don't think it's going to make us money very quickly.
That said, I own some of it, because today you're running about 30% below average for this time of the day. But my thinking is you're buying as close to the low here, and then see if it runs up maybe 10%. I don't know. It could fool you. I remember Dr. K back in I don't know 2 or 3 years ago with Google. When it broke out, and we thought, this is a big company, the law of large averages, and I think it was down in here somewhere back in 2012, and the law of large averages or whatever, large numbers, blah blah blah. But this thing had a nice trucking move higher over the last, well, up till 2014, between 2012 and 2014. So, and this thing has been a snoozer, and so my only point would be that you can't assume anything.
Even then, I mean, on an annualized basis, Google is still not particularly that fast. I mean,
no, it's
it
not.
also gave a lot of, so I still wasn't interested. I wasn't interested then. I still wouldn't be. I mean, it did a gap up, and then it went about 20% higher over, it looks like, about 4 months, and I mean, that's snoozer.
Well, but if you look at this on an annualized basis, you went from around 300. Let's see where that last breakout was. So say here at 320, okay. And you ran all the way up before, let's say you topped out here, you doubled, so more or less. So, I mean, it's slow, and it's a snoozer, but it goes higher. So, if you're into snoozers, that might have some movement for you. Maybe they'll even double. I don't know. Microsoft, that's what I'm saying.
Yeah, what we do, I mean, I think I mentioned in one of the reports that sometimes we'll put, a leading stock to us. It doesn't have to be a stock that's, turbocharged. If it has a good risk reward, that's what's important. So, in other words, if the risk is very limited and the reward might not be as fast as some of these others, but it still might be a contender for a leading stock. And yeah, I mean, I would agree that Google has at rare times had those characteristics in its chart where your risk is very limited. Unfortunately, something like Microsoft, it doesn't have the Google characteristics. Google's more of a dynamic company than Microsoft did back then, and I would say now. And so I don't see Microsoft giving a 10% pop. I'd be surprised. And if it does, then I learned something new, that maybe Microsoft does have something that they're not telling the marketplace yet. But right now, I remain skeptical.
I heard one guy telling me he'd rather own Microsoft than Google because they roughly perform the same, but Microsoft pays a dividend. Anyways, somebody says,
yeah,
I gave up my iPad for a Microsoft Surface Pro.
That's a different thing altogether, the dividend thing.
Yeah.
We don't really do that. But yeah, I mean, there's many ways to skin a cat. So if the guy likes Microsoft on that basis, and he's charted it out, in terms of long-term hold. What's that?
And he's getting a dividend he's being paid to sit around.
If he's charted it out and it works for his style, that's great. Because like I said, there's many ways to skin the cat, and it's not particularly my way, but everyone's got their style. So yeah,
anyway,
that's all good.
So somebody says they own a Microsoft. No, they gave up an iPad for a Microsoft Surface Pro. Is it that good? I heard one of my son's friends apparently got one, and he was really pissed. He said it sucked, but I guess he wanted an iPad, but the Surface Pro is cheaper. I don't know. Maybe not. Anyway, someone's asking about Vertex. Let me just answer that question real quick. I don't know. This is a tough one because of the overhead. So maybe if it backed down and set up, it might be better. If you're looking at something like this, I kind of like this. I own it, actually. I'm buying on the pullback here. They've just been kind of feeding it to me. and it trades about 700,000 to 800,000 shares a day. So it's a little more liquid, but it may be rounding out. Vasco Data is credit card security, I believe, and of course we know the group's been weak, but this was the weakest one of them all. If you look at this, you're getting 3 big bingo bars, so oversold. It's trying to round out. You had a pocket pivot yesterday after they beat on earnings, which the report looked pretty impressive to the extent that I can understand such things, but I like the technical action. I figured if it pulls under 19, I want to be snipping at it. So they got it down, I think, where is it at? 1893 right now. It got as low as what was it? 1870 today. So they're tossing it to you. It may run higher, and maybe some money comes out of the other names that are getting whacked. Like you look at PANW. Well, I'm gonna. Having some trouble along here, but it's been in a downtrend for a while. And Dr. K, is there a flood out there? Sounds like a Russian flood.
No, we're being attacked. Actually, those are missile carriers.
Nice. That's what they kind of sound like. Anyways, but you can see this is in a downward trend channel, and every time it comes to the top, it rolls over. So I'm not sure if this is shortable at this point. It may be a little bit overdone. It's been trying to hold the 200-day. Maybe you get a rally back to the 50-day, but it's been weak. However, it's just building a big ranging base. Does it top here, or does it come out of it? I think that really depends on what the market's doing. If you look at the market right now, the Dow's down 30, Nasdaq's north of minus 13 now, and things seem to be perking up. So it's basically, it looked like, I think I tweeted earlier today that I thought it just looked like a day of shaking the trees. So far that looks to be the case. Somebody says, yes, the Surface Pro is far superior. Microsoft released a new Surface Book this past Monday. The laptop that can compete with Apple, pre-sales were sold out. Wow. So how many people own a Microsoft? Mr. Softy, as we used to say. I own it. I don't know how long I'm going to own it, though. Maybe it's going to put me to sleep first, and I'll go after something else. I think I like Apple the best, though. Apple, Amazon would be my 2 favorite big caps. And probably I should just been buying more Apple on the pullback this morning. But let's go through more of these big caps. I would consider Netflix another big cap name, and look at how it's inching its way above the 50-day moving average. I was actually trying to short it on Monday, and I could feel again this thing had a bid in it, so I just flipped and went long. And it's now above the 50-day, but the volume's kind of light, so it's kind of unclear where it's going. The nice thing, though, is that it has announced earnings, so you don't have the earnings roulette thing to have to deal with. You are building kind of a head and shoulders on the weekly chart, so I'm not sure, whether this is just going to set up in a loose base, tighten up, and then go, and that may be what it wants to do. But I think it needs to tighten up, so I think you got to watch pullbacks into the 50-day. It could roll back through the 50-day moving average and then blow up. So you got to kind of watch that one, but it may be setting up. And if you're in an environment where you continue to see big cap stocks work, it might work. So, again, try to see what the market's doing. And, the longer you've traded, the more you're conditioned to like this and not like that. And, making piles of money in mostly small to mid cap names throughout my career, obviously can create a built-in bias against big caps, but I have seen times when big cap names will work. And Bill O'Neill told me, when I worked for him, there were a couple of periods, he said, well, you're going to see here that they're going to pile into big cap names, stable names, established companies, because if the end of the world comes, companies probably outlast governments. I've heard it said, but that was O'Neill's theory on these established companies. They're hiding places. So is that what's going on? I don't know, but the rally could go on for a while. So I'm going to go with it. And, Apple just broke into the blue here, or the black, or the green. Depends on how you have your screen configured. If you're using charts like this, it's breaking into the blue. And if you're using quotes with green and red, it's breaking into the green. And if you're an accountant, it's breaking into the black. So different colors for different, how does that work? Different strokes for different folks when it comes to colors. Anyways, consider community-acquired pneumonia is the #1 cause of death from an infection, especially in the very young and older patients. Sempra's blah, blah, blah could be a blockbuster drug. Look at its chart. What's the symbol? Let me guess. CMPR? CPRA? No. No, help me out there. Okay, I'll blow that off for now. Somebody asked about Twitter. Yeah, yesterday I traded Twitter, and of course I held a core position overnight because I felt if I sold my entire position into the move, it would gap up 2 points this morning. Instead, holding some made sure that it pulled back. And what you're doing is you're basically in this range, and you're coming towards the low of the range. It might be viable down here. I think this is a crazy ride, but I think that it's trying to hang in there. Maybe it blows to the downside and breaks out. My reference point is a 20-day, and what I would do here is, if you were trying to trade the stock yesterday and you took a profit on it and you sold out today when it started to weaken, looking at it now, it might become viable. I'm watching it here. Let's pull up the 620 chart. Here's what it looks like here. It's sort of undercutting the lows of the day, and notice how the volume intraday is drying up here. So this might be a spot you could use, maybe, I don't know, 28 and change as a stop. This might be a spot to take a shot, but you know, it is weak, but the market's weak today. So, and it's been a little bit crazy, and there's a huge debate over whether these guys are on the verge of greatness or on the edge of a cliff here and about to go over the side. So in terms of their business, I guess the earnings report wasn't great, and all it did though was take the stock right to the 50-day moving average, which I think is interesting from a technical standpoint, because a lot of people are saying the earnings report was ugly, a lot of people are saying it was great, blah, blah, blah. I think, though, the bottom line is if you bought it, and hopefully if you bought it as close to the 20-day line as possible, and you're up on it as of yesterday, because it closed very, very near the peak, got above 31 for a little while, but today you could have used the 10-day as a trailing stop or the 20-day, and you would probably be out if you're using those as your stops. If you want to give it more room, you could use a 50-day. That's kind of too far down for my taste. But now it might just be in a position where volume runs out and the sellers come in because they saw the ugly report, and everybody's coming in. We'll see what happens. Someone says Twitter earnings were good, but MAU and guidance was not up to expectations. Okay. Which means what? I don't know. The stock turns around on huge volume. Look at that volume. That's massive. And I actually thought the thing would gap up, and I would be pissed I didn't have a massive position like I did yesterday. And no, it comes in, and but it may just be viable in here. I don't know. And if the market continues higher, this is a big cap name. There's a lot of these big buyers. I don't know what they know. Remember, they're long term. Okay, so in the short term, you don't rely on what they're doing because they're not smart in that regard. They might be smart in figuring out there's some value here longer term. How that value is realized, I have no idea. Maybe they get bought out. I don't really see who would buy them. Google, maybe Microsoft wants to get into tweeting. I don't know. CEMP for Sempra, somebody says. But that's, you know, it's just kind of hanging in the base. But if you were buying it yesterday and you're looking for it to thrust out of here, because this looked good enough to do that, then your trailing stop could have forced you out already. You know, that said, the movement for Twitter is not really unusual. So CMP, Sempra, looks like a piece of junk to me. I wouldn't touch it with a 10-foot pole. So, and if the product's so great, why did it just get blasted like this? Basically, what you have is a reaction rally back into resistance here after a gap down, a massive volume gap down, probably on earnings or something. But you know, I would be careful though, and I know a lot of doctors are subject to this sort of bias. They know something really well. They know the drug and they fall in love with it. I had a neighbor down the street, and he told me he was an expert in biotechs, and he's a doctor, and he was making money, I think, in 2000 when the biotechs had a run. When did they have a run back? Was it 2000, Dr. K? Remember when the biotechs had a little run?
It was right. You know, it was right after Celera Genomics when they mapped out
Which
human
was
genome
when?
Very late 1999, and CRA was a ticker symbol, and it went on a tear to the upside, and so did it.
Yeah, that's
carried
right.
all the biotechs. And they had a massive run. In fact, the reason I was up strong triple digits in 2000 was because of that first quarter where I continued to play the biotechs into that first quarter into the market top.
Yeah, anyways, this guy, you know, he could tell me every drug every company had and how great it was and how it did this and that and the other thing, and then he just got creamed. And I know, my urologist was a big fan of some of these biotechs, and he's making money when they go up. But I know he like loved this one, and I guess this was beautiful while it was going up, and then it got creamed. And thank you, but I'll blow that up. So if I see something like this, I'm not really into it. Now, that's not the pattern I want to see. It needs something. It needs maybe a new lease on life. But that's really what the chart looks like. I don't know. That's not something to buy. So I apologize for not being able to endorse that. Although I loved your explanation for their drug. Let's see. Where are we? What was I going to look at next? Oh, let's look at Gilead. I actually own that. And I think you had a pocket pivot, supporting pocket pivot off the 10-day and coming up to the 200-day. You had a pocket pivot here, but they came out with earnings and they got dinged on earnings. But I was impressed that it held on the pullback to the 10-day. So once you could see the volume coming in here, you could buy it. And it's gone higher. Hold on one second. The number of marketing calls we get in a day is phenomenal. So, anyways, and what I think is really stupid is they put the name of their company, like this one is Healthy Living. Okay, am I going to answer the phone for that? The other one I like is someone that calls Market Research. Yeah, okay. Let's see. Splunk. Splunk with a stop at, you mean shorting it? I mean, it looks like it could break down. So if you wanted to short it, you probably should have shorted it this morning at 58 and change. So it does bounce off the 50-day, but it's already, you had a big break here and there was no further downside and it's hanging along. I don't know. Earnings coming up. I'm not sure I'm all hot to be short anything in this market. I mean, other than hitting something, like if I hit Splunk right at the 50-day and it came down a couple of bucks, boom, I'd take it and be gone. Look at UA if you're into something like that. This might be a little better. I would like to see it get higher. I have an alert set here just under 97.06, which I think is where the, where's the 50-day? Wherever. If it dings it, I might come after this. But you can see there's a wedging rally. It's reversing today, but UA is kind of, it's neither here nor there right now, so it could roll over. And there might be some situations that become shortable, even if the market continues higher, and we've seen that. So, the day that the market was up 300-something points on the Dow, this thing, was a nice short. I made money on this short, about 10% on the downside, instantaneously almost. And that was nice, and there are some of those around there. So if you want to play the short side, I think you got to hit them just right, keep tight stops, but also recognize that you may not get much more than 5-10%, so don't be a pig. Splunk long. Sam, you dangerous devil, you. Splunk long, go for it. See what happens. But I don't know, you're asking me to endorse this. I don't really see anything telling me to go on. Let's take a look at something else here. This is really where I look at stocks, is on this. I think Market Smith and Wanda are pretty much useless. I don't really see any signs. I would like to see another oversold bar, frankly, on this. You can see here. Let's blow this up. Yeah, I'd like to see another oversold bar. Earnings come out in the middle of November, 11/19. So I'm not so sure there. I don't know. I'd rather be long Apple and Amazon. How's that? Even Gilead's working. Let's go back to some of these. Biogen, I thought on Monday could have been bought. You had heavy volume here, so there's a big bottom fishing pocket pivot after earnings. And then it holds tight. You see the volume dries up. So Bible along here, and bingo, you get a nice pop, which I believe just missed a pocket pivot by 1 day, coming up off the 10-day and the 20-day. Now you're trucking above the 50-day. If the market goes higher and they take big caps, guess what? This maybe goes higher. But I do like this probably better. And also Celgene, which comes out with earnings, I don't know when. Let's take a look real quick. There we go. 11.5, so next week. So there's that danger. But it had a pocket pivot, I believe, right here, and has moved higher since then. So, It's acting well. Somebody asked, Gil, you going to present at the next HGSI seminar? Yeah, I'm planning on it, if they're going to have one. I know Ian Woodward's getting pretty old. I think he's 84. And he moves a little slow, but, you know, Ron is good. And I think if Ron had some help, even if Ian didn't feel up to it, but who knows, Ian is like a monster, man. That guy, 84 years old, he's still going. And his mind is still sharp when it comes to the stock market. Anyways, yeah, and it was nice to see a bunch of you this weekend. My table, again, closed down our section. We were the last table to scoot. I'm sure the restaurant was ticked off because there were a lot of people waiting to come into the restaurant. But we were just carousing and drinking and talking trash most of the time. But it was a good time, and I hope everyone enjoyed the presentation. I also noticed a number of new faces there, which is good. I like to joke that usually the HGSI conferences, because it's actually a group of very good traders, very experienced, very good traders, and naturally, because mostly you don't see a lot of minorities in the markets, they're mostly old white guys. And I have nothing against old white guys. You know, the guy who gave me the biggest opportunity of my life was an old white guy named Bill O'Neill, so God bless old white guys. But in any case, that's just the way the crowd evolved, okay? And so when I go there, that's mostly what it is, a few women. But now I'm seeing a more diverse crowd in terms of coloration, which I guess is a good thing. I know at least Obama and company would be happy. But I think it's where I'm more encouraged is the age. There are younger people showing up, and I think that's good because one of the things that concerns me is the lack of interest in the stock market by so-called millennials and younger people, which their experience in the market has been mostly 2000, 2008. So that, you know, and scandals and the bailouts, and so to them it's all BS, and I can't blame them for thinking so. But I'd like to see more new blood, and so it was encouraging to see that, and hopefully we will have that in the next one. No, Dr. K doesn't use HGSI. He's still in the Stone Ages. You know, I'm trying to get him to change, Dr. K, but he just doesn't want to. He's so wedded to Wanda and the old ways. But that's okay. He'll come around someday. Maybe.
That was probably even about a year ago, because I've been using other tools and techniques that.
Okay, that's good to hear.
I'm so in a lot of algos, so I don't think it's going to really apply to a lot of people. It's very specialized stuff, and some of it's my own programming as well. So.
Okay.
No, I like Wanda only because it does things fast. And I was in touch with HCI guys, and I said I had a checklist of stuff. Can you do this in this amount of time? They said no, the software isn't at that level, but they would keep me apprised of when it does get to that level. And when it does, bye-bye Wanda.
Okay, well, I'll have them keep you apprised because I know they put everything I wanted, and when they did, it was bye-bye Wanda. So, hey, we're $25,000 richer because of it. So I'll take it. You know, that's real money. As my son said, yeah. I can afford to buy him with that kind of money. I can afford to buy him the basic Dodge Challenger, which is what he's all hot to buy or to get when he starts driving in a couple of years. Anyways, Mobileye, probably a short here. I don't know. It's not something I'd buy, but you know, it's in a position where it could rally. It could rally up to 52, up to this high, and go through the 50-day if the market remains strong. Possibility. So I wouldn't put it past it. All right, I may get blasted on this, but you know what? I'm going to buy 25,000 measly shares of Twitter. No, I'm sorry, 2,500. Right here, just to see if my theory that it might turn is right. Let's look at the. I could be wrong here. Yeah, and basically what I was talking about earlier, and this is one way I look at the chart here, because I don't look at the MACD and look for things to cross, even though there are things that cross, and people who like that kind of stuff, you know, it's all there for you, crosses and whatever. But I just kind of get a sense of what the picture is trying to tell me, and what I'm seeing here is as you come down, pretty steady selling, which is not, you know, unusual if people are worried about the report and they've had the stock for a while and they want to cash out. Maybe there's some insiders because there is a lot of stock out there. Now, what are you guys all buying it now? You're just hitting $29.29. I get filled at 23 cents. So we're $29.26 right now. It's 27 on the offer. Anyways, Come on, you guys, push it up. Like, I don't think you could. It's too thick. This is way too thick. But you can see it's bumping against the 20-period line here, and it did here. But all I'm noticing is that you undercut the intraday lows, so that's like a shakeout. And the volume is lighter, and then boom, it turns around. And this is a kind of a setup that when I'm trading foreign exchange, Forex, I look for this sort of thing. So, and a lot of the techniques I use in Forex are very applicable to a QE market, where you buy weakness and sell strength. Dr. K, what is happening with the VIX model? Why don't we have? Well, you're probably wondering why there is no signal, but I'm sure you can answer that. You want to go ahead and cover that? Should I bring up the VIX for you? What do you want to look at? The VIX?
No, actually, it's a simple question. It's a good question, and I was anticipating this question.
Good. I like that.
On it because, well, I'm just waiting for someone to ask the question. Essentially, as people probably know from my reports that I've sent out, the VIX is a shorter-term model, except with one exception. If the market goes into an uptrend, then it's going to sit on a signal. And I did say in a prior report that with the new fail-safes in place, it allows for buying back. So in the current signal that went, I think it was on October 9th, that signal was then stopped out because of the fail-safe in that context at just over 1% loss, and then it was bought back. So basically, we're still sitting. I mean, this is the beauty of the fail-safe is that we'd still be sitting on the long position. When the signal went out to members, the fail-safe was not in place, and then when the stop was hit, I think it was about a 1.5% loss or something. There was no follow-up to buying back the position, and then when the fail-safe was put in place, the stock, well, rather the ETF, had already rallied by a number of percent, making that threw off the risk reward. So there was no entry point at that point once the fail-safe was in place. So basically, the upshot is from here on, the fail-safes are good to go. Now we're just waiting for an entry point that has a favorable risk reward. If the market continues to uptrend like it has, then the model is just going to sit patiently on the sidelines until it does get a favorable risk reward. That risk reward will come when the market does have a sell-off of some sort. I mean, in the market, as we know, the market doesn't go in a straight line, so expect some sort of signal outside of the gaps. Expect a buy or sell signal to occur, I would imagine, within the next couple of weeks. Just because, yeah, as we said, markets don't go up in straight lines. You know, there are exceptions to this rule, of course, and we can see early this year in February, the market went up, 4 weeks straight, pretty much in a straight line. So unless, and the model, by the way, was on board on the long side of that, with the fail-safes in place. So it won't get knocked out of its position and not be able to buy it back, which is very invaluable to the model's performance. Right now, we're seeing, what are we in, 1, 2, 3, 4, we're in the fourth week of this fiercely steep uptrend. And that's like my best guess is that the model will probably see an advantageous entry point within the next week or two. So stay tuned.
Okay, we are. Let's see, I'm watching Twitter here, seeing if it moves higher. I think if we invoke the ugly duckling, might be able to get it going. No, not happening. What's going on there, Dr. K? Now it sounds like you're underneath a waterfall over there.
What? No, that's not me. It's completely quiet here. That must be some weird static on the line.
Possibly. Maybe it's the Russians tampering with the underwater internet connection. Anyways, where were we? Got any more questions about stocks? We talked about the big cap. Amgen is doing okay today. Well, it was trying to, but you know, this thing. Whoops, where are we? It's kind of coming back up into this bay. I don't know. There's overhead here. Maybe it's trying to come around, but they had a decent earnings report, I guess, and started up this morning. It's flipped around a bit. It's a little uneven, but I guess, you know, we'll see what happens with this. How about Baidu? Baidu's been trying to rally. You notice this thing going nuts, and it's hanging in tight after a gap up. I don't know if that was on earnings or some other news, but maybe Baba. It was Baba news. Now Baba is interesting, mainly because it looks like a piece of garbage, but it's coming into this area of overhead, so maybe it needs to back and fill. But I'd watch and see how it holds along the 200-day, because maybe it holds tight and volume dries up. So you've also been seeing some of decent moves like pocket pivot here on Netties trying to come up, and it's coming up this sort of cup thing. Cena was another one I noticed was trying to turn, and it's in this sort of cup thing, and I don't know if it's trying to head back to the highs or it's going to roll over, but it's been getting some pocket pivots in here on the way up, here and here and here. Well, that one is going right here off the bottom. So right now, where was it? Here's one coming up to the 200-day. That's what I'm talking about here. So, some of these look like they might be trying to turn, so maybe this is going to turn. I don't know. But that's going to depend on maybe China comes up with their own version of QE, is a possibility. Yeah, I noticed yesterday, someone's mentioning Goldman Sachs, but yesterday you had this big pocket pivot in the XLF. And I know a lot of people think that the market interpreted the news that yesterday that the Fed would not be raising rates in December, but if you read the report, they actually took a more hawkish stance. And immediately I saw after the report, the dollar rallied sharply, and gold tanked. And gold is down again today, if you take a look at it, which to me implies that interest rates, they're going to raise. And like Dr. K was talking about earlier, it could just be a token amount, but they're going to raise, which I actually think would be a positive thing for the economy. As it would help to relieve some of the distortion in terms of the cost of capital, and maybe get the banks off of their duff where they can lend and make some money. And I think the action in the XLF was a function of that. And you have movement in Goldman Sachs, not really a pocket pivot, but here's a pocket pivot here. It reversed on earnings. JP Morgan probably a little bit better on a pocket pivot here off of the, well, it might have missed by 1 day. Close enough. But off the 200-day moving average. So a lot of these are trying to turn. And let's see, Wells Fargo, another one. You see here's like a sort of a pocket pivot. It's at least a 5-day, but it's been having some nice movement off of the 10-day since I think they came out with earnings. Bank of America, same thing. But the response yesterday I thought was more in line with the assessment that the Fed would be raising in December, which I actually think would be a good thing. I don't think that it would be a bad thing. Hey, Dr. K, someone's asking if you day trade the VIX. I'm not sure why. How many times do you use the restroom, too? Can you go into both of those topics?
I like questions like this because I've explored these ideas thoroughly over the last many months. Actually, no, even before then. Actually, this would date back to about 3 or 4 years ago when I started to toy with the idea of making money off volatility in the market. And what I noticed was that day trading the VIX is profitable, and the risk reward is quite exceptionally good. The issue that I have with it, and I've told Gil this, is that you have to be really quick on the trigger, and you have to be right there in front of your screens. You got to be one of those guys who sit with your nose in your screen, and I'm not that way. I like to multitask during the day, and my head would go stir crazy if I had to sit in front of the screens watching these positions. And what I noticed was when I used my own money, because obviously it doesn't mean anything unless you're actually doing it real time. Yeah, it was profitable, but the problem was that I would miss some key signals because I wasn't right at my computer following the prices. And over a period of about 6 months, I realized this is not for me. It's not going to work for me, and so therefore I'm going to find a longer-term approach to trading volatility, which I did. I found 3 different iterations of that, which worked. And the issue then came to risk management, and I managed to take that risk, a lot of that risk out of the equation, and the hopefully what is the one of the last incarnations of these tests is this fixed volatility model, which with the fail-safes in place, I'm very excited to see it in action. So I'm waiting with bated breath for the first signal from from the model. And I do hope that it will come within the next week or two. Of course, it needs to have a favorable risk reward. It's not going to jump the gun on that. So let's just be patient for it.
Somebody's laughing, I guess, saying, I guess, we're the opposite. No, we're actually exactly the same, but entirely different. So, you know, it just depends what side of us you're looking at, right, Dr. K?
Yeah, it's a multidimensional conundrum.
Yes, exactly. So, anyways, where were we? I don't know. I thought I was hearing some ducks in the background. I don't know. We might be turning back to the upside. Look out. I think that's the ugly duckling. I'm not sure, though.
There are ducks around here.
Oh, wait, he just flew past my window. There he goes. Anyways. Okay, let's see. Looking around, I was looking at this, JD.com. This thing's holding tight, and it's pretty damn ugly, actually. Maybe it's going to roll over. Earnings come out, but it looks like it's trying to set up here. So I don't know. I'm watching this, and maybe. I don't know. Now Twitter's trying to perk up just a little bit. I don't know. Somebody said, did I hear you say you trade Forex? I did actually say that, yeah. So, not a lot. Anyways, but I'm not going to get into it here. That's not. I don't even think I'd have a Forex website. I think a lot of it is marketing baloney. And it is purely technical. That's what I like about it. So, and I also think that the stock markets and the markets as a whole have become more connected because of QE, and I think market movements correlate somewhat to currency movements, and you can see that actually. More recently, the dollar's been rallying with the market. And on days when the market's getting hit, you'll see the dollar sell off. So there's some correlation there. That comes and goes. So there's some things that occur and some don't that are useful in terms of helping to understand where the markets are. LinkedIn is continuing up through the 200-day. I'm watching that. Tesla. Tesla's a dog. I still think it's going to 180, heading for this low down here on the weekly chart. Well, I think it'll probably come perhaps after earnings. So. Look at Apple pushing for 120. I think it's at least headed for the 200-day. You know, so that's what 120, 163. So there's a couple of bucks in there, I think. But I think that's my biggest position by far, mainly because it's steady and you know, it looks like it wants to go higher. It's in a better position than most of these big caps. I like, and Amazon too would be number 2. And that's just cruising up, and I think the volume levels are picking up today. So Google's also another good one, I think. But I think I like Amazon just because of the dynamism of the business model with the AWS, Amazon Web Services. So, anyways, any other questions? What else do I want to look at here? I think some of my stuff. I mean, retailers have really not been a place to be. Like UA has been pretty weak, but also you look at Dick's, which I think I've talked about on the short side, and Lululemon, all breaking down and just looking uglier and uglier. Getting over to some of these, this is another one I shorted, and this was a nice breakdown. You got a shortable gap down. Volume is drying up, so maybe it's ready to roll over again. I don't know. But I don't know. I think if you got this, it's going to take a little while. You've undercut this big low, so maybe there's going to be a blip to the other upside. Maybe that'll come if there's a strong earnings report. It's Cyber, which announces next week. And then later on in the month, of course, is Palo Alto Networks, which I already looked at. But you can see Cyber's looking pretty grim here along the 50-day, and it's not getting anywhere. And it's a big head and shoulders type formation, or you can say a cup with handle that failed pretty ugly, in ugly fashion. But here's a little pinhead, left shoulder, pinhead, right shoulder. And that's breaking down. You could consider this another left shoulder in the pattern. It all does sort of fit together, but this is actually typical of how you'll see some head and shoulders formations set up. The head is actually a breakout attempt from a late stage base that fails, and so that forms a head. And then the left side will usually consist of a couple of shoulders that are part of the prior base. So in this sense, you have a cup with handle that's a late stage failed base that then morphs into a head and shoulders, and you'll get that a lot if you read the new book. Talk about that a lot. So Looking around, what's exciting here? Didn't you have some pocket pivots like in Ulta, which I don't really care for, but yeah, I don't know. My daughter, I think, gets a lot of garbage from them, so her room smells like a cross between chemicals and a fruit stand. So let's see. What about Ulti? Pocket pivot. That's just a breakout, though. Cup and handle breakout. I don't know. I don't buy breakouts in here. I'd be a little wary of that. EEFT. Someone's asking about. Well, that just keeps going higher. That's a good small cap, but it's pretty small, too small for me. So I've never really gotten into it. Trades 347,000 shares a day, so it's acting okay, but not really any viable position. It doesn't look like, but it has continued to truck higher. Nice big volume pocket pivot here. Anything else? Oh, here's a brutal situation here. ZLTQ. There we go. Been in a base for a while, and came out with earnings. Looked like it was going to gap up on earnings, and instead it blew up. So it's not 100% safe out there. So in my view, the best place to be is in stocks that already announced earnings, and avoiding playing earnings roulette. You might get lucky, but I think most of the time you can get hammered. I think anybody who was buying Twitter before earnings found that out, and then to add insult to injury, they probably shook you out and blew you out of the thing close to 27 and then take it back up to 31 yesterday. So even when something blows up, it doesn't blow up, and that's kind of what happened with Twitter, I suppose. But still would confound people either way, I think. If you were trying to short it, thinking this is the end of Twitter yesterday, you got squeezed pretty good. So. Well, that's about it. That's all I have. So, I think basically you've got a market that continues higher. You probably use weakness to buy until you start to see something break down significantly or something more definitive on the downside. And I think most of you stick to big cap names, which seem to be working. And the unlikely heroes are the ones like Amazon and Apple, which have continued to go higher since announcing earnings. So Facebook is another one, although you're going to have to pay earnings roulette with that. Netflix trying to hold in there. Maybe that turns into a short, though. And I would keep an eye out for this if it breaks the 200-day moving, or I'm sorry, the 50-day moving average on heavy volume. You are sliding past on light volume, so that is a possibility. So, I basically like to joke that I have my half bull, half bear Halloween costume on right now, and I'm ready to do whatever the market says it's going to make me some money. I have no axe to grind, and I have no opinion in terms of precisely where the market has to go for me to make money. I'll just look at stocks on a individual basis, long or short. So anyways, that's all we got, you guys. Thanks for showing up as always, and we'll catch you next week. Have a great weekend.
Take care, everyone.